on the other extreme, not extreme levels by any means. But again, I think this is a yellow light for me personally when it comes to indices. Not going to be bullish, not going to be bearish, or not overly bullish or overly bearish at this time. Looking for pullbacks, then I'd be more bullish. But right now, I think that my personal opinion on the indices is that I think that they're stretched. They've had a remarkable recovery, but I think this recovery is due to cool off. I mean, you've got stocks in here that are, look at Palantir, look at Robinhood, which is a stock I own, and I love this stock. These are great companies I really love, but the hype trade has exploded, right? You've got like stocks like Roblox, another, believe it or not, yes, Roblox, you can trade that stock. Look at this thing. It's been a monster. So, Reddit is another one I think that's done really well. Actually, Reddit's not done as well as I thought it would, Reddit. But anyways, you've had a lot of hype in the trade. So for me, it's one to just kind of sit back and wait. Guys, up next, we're going to have Chris Pulver take over the show here. Reminder that the Edge Finder sale is going on right now. Get 45% off by sending us a direct message on the website. And we'll extend that, by the way, to the Pulver Alert service as well. If you like Chris Pulver's commentary, you can actually get a huge discount on his signals as well. Send us a direct message for more details using the link that just got dropped in the chat. Stay tuned. Up next is Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Hope you all had a great holiday weekend. Wanted to just kind of address a couple things, really clean technicals, and why I think we have to have something, at least in the form of a light pullback. A couple of reasons. I'm going to highlight this right here. I'm putting an arrow to my 50-period moving average right there. And also, let's count some waves. Since the bottom on April 7th and the rip that we saw on April 9th, if we go 1, 2, 3, 4, 5. I'm not saying this is a guaranteed fifth wave top, but I'm saying that as this push happened for these last 8, 9 candles, I think it would make some sense that we at least see an ABC correction or a 1, 2, 3 correction. So something like this. There's wave 1, 2, 3, 4, 5. A lot of times when we see correction, it is pulling back to at least test the bottom of wave 4 or the low of wave 4. So it'd be past resistance here. Okay, I guess I'm not drawing that very well, but past resistance here or the bottom of wave 4. So an ABC correction. That's it. It doesn't have to be huge. It doesn't have to really do any crazy damage outside of just pulling back and checking this trend. And also that 50-day moving average, at the very least, we're a lot of points above it, which is also pretty unusual. So value-wise right here, we're sitting around 59.50 and we're at 62.50 plus. I mean, 300 points on the 50-day moving average. Honestly, if you go back to a lot of periods here, you rarely see 300-point moves unless we have a correction coming shortly after. So, for example, this move, we were straight up off the 50-day. That was around 274 points. Okay, the magic number today is 300. So how many times do we get 300 points above the 50-day moving average? You can see it doesn't happen very often. This candle here was around 270. Then it went sideways and found the 50-day. Over here, I would say that's a decent stretch, probably not 300 points, but let's go from this point here. Around 230 points. Decent stretch before we had a top. Around 230 points. So, I mean, again, you can go back as far as you want. You're not going to see a ton of overstretched moves above a 50-day moving average without having some type of pause or pullback. So that's my thought. Whether it happens or not, obviously nobody knows. We've got some drama. It's Musk versus Trump 2.0. Who knows? I just know Tesla's being punished pretty badly for it, at least with a nasty gap lower. I've got covered calls. I've got collars. I'm just kind of waiting to see, does it get worse? Some of my protections out into August. Here's what intraday price action looks like. So we gapped lower, pretty calm price action so far. And I've got some potential floors today around 62, 35, 30, and 25. Potential ceilings 75, 80, and 85. And price for Monday's trading might be just exactly this, sideways. If it does roll over, the VIX is elevated a little bit. VIX is up to 17.63. If it does roll over, we're looking at like a 1.1% move. That'd be mostly to the downside. So that would be from the close on Thursday. Even though the market closed early, it was up quite a bit. We're up like 0.8, 0.9% on Thursday, even with that short holiday trading. But if we pushed lower for the day, potentially has the kind of 6,200 in the cards if we're going to fall and fill this holiday gap, possibly push a little bit lower. Okay, but so far price action seems to be pretty contained, just a little bit of a gap lower, but that's about it right now. I do have a pending order here at the tops, 6280 by 90, 85 by 05. So I'm kind of looking at defending these two levels here. 6280 and 85. I'll keep those right there. So if the ceiling remains in check, then hopefully I see some additional profit. Otherwise, if price breaks the lows, then I'm not going to get filled at the pending orders that I have, which is fine. Okay. All right, let's have a look. Does that make sense on the wave count and the 50-day moving average? And again, feel free. Like, you can go back to any SPX chart, look at the 50-day moving average, and see that we oftentimes don't have a big push 300 points above without having some type of pause or pullback. So again, this week, there's not a ton of news coming out this week. This is not the inflation week. This is kind of a nothing week. If we go to high impact for this week, take a look. So today, all low impact. Australia expecting to cut rates by 25 basis points. RBNZ holding rates the same. I wonder what that does to the Aussie New Zealand. FOMC minutes on Wednesday, 2 p.m. I mean, is this a nothing burger? Is this more just focus on July 30th? We have CAD employment on Friday. We had non-farm that they squeezed in on Thursday last week with the job numbers being okay. All right. So this week, FOMC minutes kind of the big one for the US. That's about it. We might have some, I don't know, some peripheral stuff happening like noise. Next week, though, inflation data hits. So we have CPI on Tuesday for the US, PPI on Wednesday for the US, retail sales for the US, unemployment claims for the US all next week. And earnings season kicks off this week as well. So the 14th or the 18th, probably a bigger week as far as what's at stake, led by financials getting into the Mag 7. They're usually the first couple weeks of earnings season. So I'd say that inflation data plus your round of earnings really hit the headlines. Is it good or bad? What type of guidance do we have? I think the pivot's been hard, meaning the U.S. has pivoted hard towards growth. I think that bodes very well for stocks. It really do. Even if we are passing this tax bill, Trump obviously is pushing it through. Republicans have the power to do so. I know Musk has been vocal about it. It's not really going to matter. I don't think anybody wants to be kicked out of their seats in midterms, which is why they're all voting for it. There's a bunch of terrible stuff in it, just like there is in pretty much every 1,000-page bill that nobody reads. But that's not for us to figure out. I mean, what we have to figure out is, can we trade and make money? And to me, like I said, if I'm just looking at simple wave structure, wave 1, 2, 3, 4, 5, inside of this, I'm looking for at least an ABC correction. Whether that pulls back into like 6,000, that's a shallow pullback, but that still fills that gap here. This would be the ceasefire trade agreement gap if we fill that. If we pull back any deeper, then possibly coming back to this U.S. China trade agreement gap. But to me, I'd say the market is very well supported. There's a 21, a 50, a 100, a 144, and a 200. There's a lot of dynamic support in here. So, I mean, and this could be one of the more crazy volatile markets if the market came all the way back down below the 200, then had a dead cat bounce, and then fell all the way back down. I don't think that's going to happen. But, would I be surprised? Not really, given what 2025 has unfolded so far. I would say that even if we have a pullback in an ABC type correction, a 1, 2, 3 type correction, we're going to find some really good dynamic support between, I'd say, 5,900 and 5,700 right now, just because that's lots and lots of moving averages. Plus, we've got some gaps in support at previous lows, right? And if you look at this posturing, this high, if this is an impulsive move that needs to have a pullback, that's fine. And then we can base and build up for another all-time high. Okay, let's take a look at some other stuff. So there is our NASDAQ or our S&P. Let's take a look at NASDAQ here. NASDAQ comparable. Okay, similar structure. 1, 2, 3, 4, 5. So an ABC correction. Do we pull back to here, pull back to here, somewhere in this area, looking to go long NASDAQ, but I want to see a pullback first. Conservatively, let's say this is around the top. Doesn't have to be the top, but around the top. Are we able to pull back to maybe this level here? That's about a 5% pullback on the NASDAQ, maybe a 6% pullback on the NASDAQ. If it gets a little dicier, yeah, we could have a double-digit pullback on the NASDAQ. This could go 10 to about 12% and still have lots of good support, right? We could still be supported by the 50, the 100, the 144, the 200 moving average. So I'd say somewhere between about 6 and 12% if we have a pullback. Okay, I think the probability of pullback is high. And this is why I have cash on the sidelines. This is why I'm waiting. This is why I'm, being patient with some of my strategies and deployments, because I think at the very least we have to have something like just a reality check, just a pullback, something. Qs, obviously NDX correlated 1, 2, 3, 4, 5, something along these lines here. 1, 2, 3, 4, 5. Okay, do we pull back to this area? Do we pull back to this area? If it gets a little nastier, do we fill this US try to trade agreement gap? Maybe. Okay, does it mean that I'm taking bearish trades right now? Not really. Daily income wise, yeah. Daily income wise, sure. Like this morning, I did bear call spreads on SPX and it worked out just fine. Okay, but overall, all I'm really waiting for is a dip or a pullback so I can position for slightly higher VIX, where we've gone up from lows around. I mean, it had a 16 VIX last week, and now it's up to 17 and change. So that little spike on the VIX is up around, 9%. Okay, so slightly elevated volatility. Do we get the VIX back into the 20s again? Does this roll over? Looking at some support levels in here, do we end up breaking that support? Do we end up breaking this, huge trend line at some point? I don't know. So I just think a pullback's needed, and hopefully we will get one here maybe in the next week or two. Okay. All right. Let's go dollar index. Russell and Dow as well. Dow just shy of the all-time highs. Again, even a pullback here. I think that would be great. If we get a pullback just shy of the all-time highs, where? 1, 2, 3, 4, 5. Do we get an ABC correction on the Dow somewhere in here? I'd say between like 430 and 415. So between 430 and 415, posturing for more ups. And I mean, I really like kind of the 1-1-1 strategy for that, where I can do a bear put spread. Actually, this wouldn't be awful. Let me see if I can look at this right now. This is going to be interesting. I'm going to see if I can get a bear put spread on the Dow if the premium is good enough. I don't think it's going to be, because the IV rank is pretty low, but let's find out. If I went out on the Dow, probably have to go out like August, September, 46 days. That's going to be tough, but it's all about the premium. That 458, that's way too high. Why is it strike price so bad? That's a terrible strike. There we go. Okay, so I can get $1 something for that. What's my lows? 370. So I'm gonna go quite a ways down. I'm gonna go to like 380, maybe 390. 390 is not great, but I'm gonna go out further. It's only 39 days out. Let me go to maybe the September 19th one. Now I should be able to get something for a naked put. If I was gonna say I'm gonna own the Dow at like 370, I get $1 for that one. But I want to put in a bear put spread. So like that, it's a $5 Y to get Where did it have to be? So 375, 80, 85. Really? That's terrible. Okay, I was hoping I could put a bear trap in near current highs and then put in a naked put that gets me paid. Instead, I probably do something more creative like, hey, I'm going to own it at 370 or 375 and put in a 111 like this. Like I can pull in some income here out to September. The Dow would have to be all the way down to 375. The issue with the trade like this is the naked put is facing a lot of drawdown potential because even if we had a pullback from 446 down to 425, that's a $2,000 pullback on 100 shares, right? So if I did that on 15 accounts, I'm going to be in a big fat drawdown, even though the price is still safe. It's just a drawdown that I don't really want to necessarily work through. So I probably would just wait for like a dip, a pullback, then put on trades like this and try to catch more of the recent low. If you want gold, yep, I'll get to gold in just a second. I will get to gold in just a second. All right. So Dow, I like. I just don't get the premiums that I want. Russell, also would love to see a pullback in this one. I did some rolls last week. I've still got a 201. I mean, I own the shares at like 190. I'm getting them covered at 201. I'm just going to keep adding more covered calls by rolling. A pullback is fine. This one has performed way. I mean, it's up, but off of the lows. I mean, it's up 30%, which seems like wow, that outperformed, but it's still not at all-time highs. So this the big question is like, well, if the Fed starts cutting rates, is this going to allow the Russell to catch up? Is small caps going to outperform? To be determined. I think there's so many companies within the Russell 2000 that still don't make money, that still aren't profitable. That it is. I mean, it's a good index. It's just not my favorite. I think if you want to trade the positive drift, I think you're better off trading the S&P and the Nasdaq. But understanding some basic option strategies to help at least protect your position and generate income on those like higher premium positive drift indexes like the Qs and the S&P. The Dow's done a good job catching up these last couple of weeks, but like I said, I'd like to see a pullback and then maybe position for the Dow. Russell, anything in the 210, 205, 200 zone, I'm still just going to keep selling covered calls. All right, things get really nasty. I'm still pretty well hedged out to December in case the market just decides to do something that nobody sees coming, which is like black swan, right? Which we don't know. I still think the U.S. is focused on growth. We're going to obviously add, $3 to $4 trillion to the deficit over the next 10 years. This is a hard pivot. This is the K-shaped recovery that we had since COVID has now become an E, something like this, right? So instead of the K-shaped, which is if you have assets or you don't, you can feel it. If you have assets, you're doing very well post-COVID. If you don't have, so this is the have not. Okay. That's what COVID was. Those that have more. Those that have less. And life is more expensive. So the whole idea for the Trump administration is to pivot and benefit both, which is shifting the have-nots into having something better, maybe some improvements. I still don't think this tax bill is anything for everybody. I think it's still very much catered towards the top. There's all sorts of weird energy credits that are going away. This is terrible for new energy. This is great for old school energy. So I don't know if this is a good play in XLE or if this is a good play for like Chevron, Exxon, some old school like legacy energy companies. But I don't know. This whole thing could be like this AI bottleneck. Again, most importantly, it's probably going to be earnings season, which is a couple weeks away. We get into earnings season next week. We get into inflation data next week. This week is more, does the market stay where it is at these highs? Does it roll over on itself? We'll find out this week. I think this is a pretty key, like pivotal week to see where prices go. What type of guidance do we get? What does July 9th mean? Does it mean anything? 90-day pause, does it mean anything? Do we have to come out and have a public announcement of how many companies lined up to do deals with us? To my knowledge, we have UK, a pause in China. I don't know what kind of deal we have in China, but we have UK, China, and Vietnam in good faith, right? In good credit. Um, I think if Eurozone wants to play strong and Japan wants to play strong, they don't just roll over. You've got strong economies that are looking for trade deals outside the U.S. And if the market catches wind of that, they could also be another potential headwind. Okay. So anyway, just lots of stuff to unpack. That's all. Tesla. I'll get to Tesla. Just give me a second here. How much is a terrible price strike? What does that mean, Lee? Terrible price strike? Oh, it was. I just didn't have to put low enough. The put side didn't go low enough for me. I wanted to see the Dow down to 370. I think that's what the comment was. Okay, so that's Dow. That's Russell. Let's go to gold. Let's go to dollar index. Let's go dollar index here. So as I've talked about for the last several weeks now, don't sell the dollar into these lows. We're hitting symmetry. I think the dollar catches a bit of a bid. If the market has a pullback based on the wave count that I'm seeing, even a simple ABC correction, the dollar maybe catches a little bid, maybe sees an ABC type move as well. Maybe we get back to 100, 101, 102. I still think the dollar is heading into more of a bearish territory. I just wouldn't want to be shorting the dollar at these lows. If you're shorting the dollar at these lows, then you also want to be adding and adding and adding and adding. You're like a perma bear on the dollar. That's a tough trade if you ask me. I would rather be out of my dollar shorts, maybe the courage to buy low. Okay, maybe the courage to buy low to see if this gets a bid to the upside. That'd be a pretty tight stop compared to a decent upside reward opportunity. I just don't know if the bottom is in. So that's why I'm just waiting for a trend line to break or just be patient. But I think if the dollar pulls back to 100 or 101 or 102, I think that's a good spot to look to fade the dollar. I think that's fair. Again, not just fading the top automatically, but rather waiting for a trend line break, look for confirmation, position accordingly, maybe take a couple of stabs at some confirmation with trend line breaks and some price patterns. So I think the dollar catches a bit of a bid there. Oil catching a nice little bid off of 65. I think this whole conflict in the Middle East is not fully de-escalated. I think there was, yes, a ceasefire. The market's melted up higher. But if we catch bid here at 65, this is just returning back to the range we've seen for months. All this was noise, right? Noise. But if we go back into a multi-month range again, basically it's 65 to 80, right? We've made slightly lower highs, but we've made we've made equal lows outside of the little. I don't even know why this dropped, honestly. Was like, when was this? Was this Liberation Day? Was this not? I don't even remember why this dropped. Yeah, it's Liberation Day. So there's your Liberation Day. So that's what broke the market, and then oil pivoted hard again. I should have held that stupid position long. I'm still in a 1111 on crude oil. That's a CL trade out to, I believe, December. Looking to see if oil stays above $50. If we still have moderate tensions in the Middle East, then we're probably going to stay bid at 65, $60, pretty well supported. 55, pretty good floor. Inflation obviously is very tricky. If we're seeing oil prices back into the high 70s or 80s again, that's going to put some more like inflation, some real inflation back in the markets. Natural gas. Let's go UNG. Making some fresh lows. I'd like to see natural gas catch a bid. I'm still selling some diagonal spreads here, trying to get out of the trade for profit. I think the trade is fine. I'm frustrated to see that such a good looking bull market for a second, all of a sudden turned right back into garbage. So either this is the low, the impulse, this is more of a corrective phase, and we're just trying to get through a correction here for UNG to go higher. I hope that's the case. But if I'm wrong, I'm still going to be using my diagonal spread, which is I'm trying to think what my debit is. It's pretty low. UNG is a 5x17, so I've got 12. I think my debit's like $8 in total, and I've got a $12 potential profit. So I'm still up some profit. I'm still trying to sell. This only out to July 11th, which is this Friday. So I'll just keep selling, and lower my cost basis. Let me see what my cost basis is right now. Let's go to UNG. My cost basis is $9.05. So my break even is $14.05, and I'm trying to get it called away at 17. So I'll keep selling against it. maybe another 30, 40, 50 cents. This call still made me $1.56. So, I mean, I'm getting good premium for it. It's just how far do I have to go out? How much, like, do I want to lower my strikes? Not necessarily, but I will if natural gas doesn't look any more promising to the upside. Gold. Gold, I still think we have a pullback. At the very least, consolidation, right? I've talked about this for a while. I mean, I've not been a bull on gold. I've been wait for a pullback, right? I mean, since this whole thing has been running, I'm long gold. I love gold, okay? But I'm not buying at these highs. I am going to be patient. If we pull back to equal lows, I like gold at 3150. If we pull back to a nice round number like 3000, I love gold at 3000. Okay, to me, this is a nice bull pattern, and this is consolidation, and that consolidation hopefully has more upside. Now, it could get a little bit nastier. It could shake out a bunch of traders because obviously it's easy to see, like, well, if I just bought gold here and it goes up, that's great. Well, that's what easy trade is. So, do we have a shakeout? Do we have, gold here, consolidation, then a fake out, then comes back down, and then test the levels like my 144 200 moving average, then rips higher? I don't know. All sorts of stuff can happen. My point is, I would be way more satisfied as a gold buyer if we at least found my moving averages. Find my 144, find my 200. I'd be a lot happier. Okay. Silver. Silver actually retesting recent highs. I still think silver is a better trade technically than gold. We will see what happens to this area. If there is a bit of a backfill, then this is going to be like a slow trend on silver. But if this is nothing more than a bull flag, if this is a bull flag on silver and we break these highs with some conviction, I think silver is heading up into $40+. So keep a close eye on gold. Or I'm sorry, keep an eye on silver, because if we break above 37 and change, 40 is a nice round number, and 48 to 49 to 50 are all-time highs. I love that trade. Like, that's a metal that offers 35 to 40+%. I think that's good allocation. I think gold still performs well, even in the outperformance of silver. If silver does very well compared to gold, they're still both good trades. So I just don't think you can do a lot wrong if you're in gold and silver, at least as some type of diversifier. The technicals on silver look so good. So I like it. It's one of my bigger metals positions, kind of, diversified trades. Bitcoin, 108. Some risk off trading may sour the mood of Bitcoin a little bit. I just don't know how much lower we're going to go. To what degree do we pull back to, like, 95? Do we pull back to 90? There's a nice little structure area back here. I don't think we're coming back to 75 without some major risk off trading. If we do pass this bill and all of a sudden prices are heading higher, I mean, everyone was screaming this weekend that because Musk is trying to throw his hat in the ring for some type of third political party, that it's going to be good for Bitcoin because it's going to be something that's, debt focused and austerity focused, and getting candidates to run on a platform that's different than a two-party system that doesn't do anything different. Historically, I don't know if you know this, everyone swears that Republicans are way more conservative. No, they're not. They both spend equal amounts of money. In fact, over a 10-year run, like 8 to 10 years out, Republicans are worse in the deficits that they've caused the country. So anyway, I mean, Trump ran on an austerity-based platform that had support, and he pivoted hard. And here we are with a $2.4 to $3 trillion bill that is just kind of getting crammed in to pass, plus a trade war, plus tariffs around the world. Like, again, all this stuff you'd think, like, this wall of worry that the market has climbed. Where's the reality? I mean, a reality check would be a nice correction. Do we get one? I hope so, because I want to position for upside, but just give us a pullback, Anyway, Bitcoin, I think Bitcoin has done a pretty good job of cementing itself as at least an alternative. Whether you like it or not, some people swear, like, I know traders that have been in the markets for 20 plus years and they still don't have any Bitcoin. And that's fine. It just doesn't really make a lot of sense to me when it's just a trade. As a trade, you cannot deny how good some of these investments have been in just buying Bitcoin. So my take is, if we break these highs at 112 and change, I think there's no reason that we can't get to 125 or 130. That's just a measure move. Okay. The question there is, how bullish, how bubbly, how kind of overbought does it get before we start to see more of a correction? I mean, honestly, if I put this trend line, make it a four width, if we stay postured above this trend line here, I mean, we could be in a pretty nice bull market for a while. Even if we have ups and downs, it could still be a very healthy bull market. But obviously people are accustomed to like these crazy runs and these rocket ships to the upside and then a 20, 30, 40, 50% crash. I don't know about you, but those are exhausting. Like at some point, it's like the most important thing with a momentum-based move like that is you got to know how to take profit, and that's hard because when you start to get like super vertical, let's say Bitcoin like runs to 130, 140, 150. Well, at this point, it's like if we start to go vertical on Bitcoin, as fun as it is to have the gains on that trade, at some point you got to take some profit. You got to move some trail. You got to trail some stops because at some point that will end up crashing hard because what goes straight up oftentimes does in fact come straight down. You know, so I think that all the momentum stocks that Nick was just talking about, Robinhood is one, Palantir's been up there, Carvana's been up there. I mean, there's been all sorts of stocks that have been ripped. Like, I mean, hell, Nvidia has done it this year. You got to know how to put some trailing stop losses in to protect some profits because at some point, a move that's gone straight up 100+% is likely going to pull back. AVGO from the April bottom is going up 100+%. It's going to pull back. Microsoft from the April lows, it's going to pull back, right? And in the law of big numbers here, when you have something that runs 100+%, it's harder to go that next 100% as opposed to something that's gone up, 10, 20% off the lows. There's at least some room. So anyway, I'm not saying I'm switching to value. It's like clearly some stocks are just down for a reason, and I think there's a lot of things that are considered dead capital for 2025. But I don't know. I'm just doing some boring stuff to make money at this point. Protect my downside. Do boring stuff to make money. Wait for an opportunity that I hope I get. Dip on gold, dip on spot, on Qs, pullbacks in the indexes, position accordingly. It's like I don't know. Maybe I'm being too patient, but I just can't justify deploying, such a intentional cash position. I can't deploy it at all-time highs. It makes me sick. So I'm not going to. I'll wait, and maybe I wait longer, but it's okay. Anyway, MicroStrategy up at 400. IBIT just off recent highs. We got highs here around 60, almost $64. Coinbase, since we announced the stable coin, again, huge shot. Overbought conditions with some divergence. Okay. I mean, again, I think this is going to get checked. We probably pull back some inefficiencies here. Ethereum, I know Tom Lee had a big announcement over this last week or two. He's essentially trying to be like the MicroStrategy / Michael Saylor of Ethereum. I don't know if that's good or bad. Does that backfire? It's probably all about network effect. Maybe it does take place. I just don't know if it's going to be position now and hope, position now and position small. Because if you position now, does it come back down to revisit lows? I still think the Ethereum network-wise is a good trade, but you got to look at it like a trade. I think Bitcoin to me is a little bit easier to rationalize, just like rationalize investing in. But I think Ethereum, it just why is crypto as a whole like meme coin / fart coins, like all those coins, meme coins, why are they not performing the same? So you have like a bit of a kind of bear market look in some of the crypto space, but Bitcoin is still near all-time highs. Ethereum looks good. I mean, this move on the right side of the trend line does look like a pretty good reversal pattern. So I like that swing to the upside. But if I were to invest now, that'd be area 1. I'd have to be willing to also say, okay, area 2. I can't deny that we can't have some type of fake out here and pull back to lows before we end up getting the move back up. And that's a big if. So I think if you treat it like a trade, it's a good trade. If you treat it like a long-term hodl, I think it's risk, like everything else. Okay, copper probably gets checked. We've checked here pretty hard the last couple of days. Anything in Japanese yen is down slightly. The Nikkei, this is Japanese yen. EWJ just off of highs. I'm setting another chart. I'm here. I'm holding shares of this EWJ. So that'd be fresh highs. The DAX, tiny little 23% pullback, trying to head back up to highs. FTSE, same thing. Hasn't had a pullback yet. It's heading back to highs. China down slightly. Brazil, nice rip on Brazil. I hold shares of EWZ and ILF. That's British or Brazil and Latin America. Those are looking pretty good. Mags down a little bit. Apple down a little bit after a nice little run last week. Amazon up to some fresh intermediate highs. Broadcom, this is one of those trades I thought should be checked. I did a bear call spread here on AVGO. It's 250 wide. This is the most I can lose, but I'm hoping to at least have some overbought conditions with a reason for the market to pull back a little bit. Google, fine, holding above those 140 levels. Meta, I'd love to see a pullback here, reasonable pullback after all-time highs getting hit. Microsoft, again, overbought conditions with divergence at all-time highs. I think Microsoft is well cushioned if we have a pullback into these areas. Offer a dip buy an opportunity on Microsoft. Earnings are probably Gonna be fine. I still have dollar cost allocations. If we get a decent pullback on Microsoft, and again, this could be a very sensitive earnings quarter. If Mag 7 and the broader market doesn't deliver on stellar earnings, like maybe the market prices in, a bit of an earnings compression, maybe. We'll find out in the next couple weeks once we start to see the financials kick in. One thing you could look at for financials, XLF, which is just above these recent all-time highs. If XLF is going up, okay, it's probably setting the tone for a strong earnings season. If XLF is going down, it's probably setting some caution ahead on earnings season. Okay, we usually see earnings seasons kick off with financials, and I think they're going to set the tone. We'll kind of see where the pulse of the market is too. If financials are up and the market is ripping like bank stocks higher, then I think anything that pops up good is probably going to be pretty solid and bullish. Let's see. One spread can destroy all other winnings. Give me an example. I mean, that's a pretty terrible spread if you're letting one spread can like control your reward that much. So what's the trade? Okay. Dollar Swiss bought at 787, holding 85. Good. I like it. I mean, it's like there's always reward. There's always trade-off and options, right? A high reward to risk is low probability. A high risk reward is typically high probability. There's a fine line. I mean, my rule of thumb is if I have a wider spread, it's a low reward but higher risk trade, but a high probability trade. As long as I'm pulling like a third of that width, then I usually don't worry about it. What I don't want to do is like, oh, I've got a 99% chance of making money on this trade, and it's I'm risking $2,000 to make $100. That's not a good trade. But if I'm risking $2,000 and I can make $250 to $300, it's like, okay, it's still backwards, but it's like 1/3 of the width. So if I'm 10 wide, I'm trying to get in $3. If I'm 20 wide, I'm trying to get in $7 or so, about a third of the width. That's my rule of thumb. Okay, you want to go closer at the money or in the money that you could play around with getting 50% fills or 60, maybe 60, 65% fills sometimes. But it's just a trade-off. Just play with the strikes and play with the numbers. All right. Anyway, earnings season. I've got to go here in just a couple minutes. Earnings season. Watch XLF. Okay, you can watch JP Morgan. You can watch some other financials when they're coming out. They kick off like basically this week, next week. You're going to start to see these financials dripped in. I think XLF is a good barometer to see where earnings season is going. Are we leading off strong with positive guidance out of financials? Maybe. Is the market going to, look to jump into anything that looks positive? Maybe it's more Mag 7. Maybe it's everything that's value. We could also see that there's a rotation going on this summer too. Maybe it's better to go into stuff that's dirt cheap. Maybe it's better to go into things that are performing worse than Mag 7. I mean, like last week, I mean, Pfizer had a nice pop, right? Pfizer from these lows is up like 30%. Pfizer is up around 22% off those lows. Okay. I mean, does that mean it's like the best stock ever? No, it just means like it's getting some love. Snapchat off these recent lows. Snapchat's up 35% off the lows. I mean, even if something mildly goes right on Snapchat, that's better than sitting here at like AVGO up 95%. That AVGO has to go up another 20, 30, 40, 50%. Look, this is easy. If this just goes back up and doesn't suck, then we could have Snapchat rip up like 75%. So this might be where earnings season takes us, which is things that are underperforming or have not recovered as aggressively through April. Maybe have a bit of a bid. If the market's going to stay somewhat healthy, maybe it's a broadening out as opposed to just pumping money into AI, pumping money into Mag 7, pumping money into tech. We'll see, because a lot of those runs since April have been pretty aggressive. So I still go back to I've got like literally 2 minutes. I got to go. I think that the trade with like the 5-wave count, I wouldn't be surprised to have some type of pullback. I just don't know if it's going to be this week with light news, FOMC minutes. That's it. Next week we have CPI in round one of earnings season, and keep an eye on XLF. Okay, so I'm looking for some type of pullback. It could be very minor, 3 to 5%. It's totally fine. I don't think it's going to scare anybody. We get 7, 8, 10% like we saw last summer. That makes the market maybe flinch a tiny bit, but not enough to really derail. I don't think we're going to derail anything. Okay. So anyway, time will tell. But all right, I'll let you go. Come back and do this again tomorrow. make sure you get your discount. Get your discount on the Edge Finder. Save that 45%, and get some Pulver alerts while you're at it. And let's come back to do this again tomorrow. All right, thanks everybody. See you then. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.